Hey everyone, welcome back to Corporate Decoder. We're about to dive into Charter's latest filing, and let's just say it's a real Class A act of corporate manoeuvring with some major votes shaping the future. Now, Charter, the giant cable and internet provider, often known for its extensive network, and sometimes, let's be honest, its customer service reputation is making some big moves. Today we're decoding a report that details a special meeting of their stockholders. This wasn't just any meeting, it was all about approving a significant transaction. Think of it as a massive handshake deal with Cox Enterprises that's going to reshape Charter's business in a pretty big way, especially on the commercial and fiber side of things. If you appreciate getting these straight, no-nonsense insights from corporate documents, make sure you subscribe. We also have a Discord community linked in the description below if you want to chat live about these filings. So what exactly happened on July 31st, 2025? Charter held a special meeting and the main event was voting on a deal with Cox Enterprises. This agreement, signed back in May, is essentially about Charter buying a chunk of Cox's business. We're talking about Cox's commercial fiber and managed IT and cloud services. This is a big move into the business services sector, a space where companies like Charter are increasingly looking to grow beyond just residential cable and internet. They're also getting Cox's 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 residential cable and internet, and they're also getting Cox's residential cable business assets. But the focus here seems to be on boosting their enterprise services, and get this, Cox is actually paying Charter $1 as part of this deal, which is interesting. Now, to get this deal done, Charter needed the thumbs up from their shareholders. The report gives us a snapshot of who showed up and what they voted for. On the record date, Charter had a massive number of Class A common shares out there. Over 130, Charter had a massive number of least good proxy voting. It quote, rep 6 hex million of them, each worth 1 vote. They also have a single Class B share, but this one carries a much heavier voting punch, representing over 15 million votes all by itself. When the meeting started, a huge chunk of these shares, both Class A and that powerful Class B, were represented. This means they had enough votes present to make decisions, which is a good sign of shareholder engagement, or at least good proxy voting. The first big vote was all about creating new kinds of stock. Charter is issuing a new class of common stock, Class C, and also some complex units of their subsidiary, Charter Holdings. These units are tied to about 33.6 million common units and some preferred units which come with a hefty 6.875% dividend. The whole point of this new stock and these units is to facilitate the big Cox deal. Essentially, they needed shareholder approval to issue these new securities as part of the acquisition. And how did it go? Overwhelmingly approved. We're talking about more than 142 million votes in favour with a tiny fraction against. This shows strong shareholder backing for the stock issuance needed for the Cox acquisition. It's a clear signal that investors see the strategic value in this deal. Next up, shareholders had to approve changes to Charter's foundational document, its certificate of incorporation. This is like updating the company's constitution. The key reason for this amendment is to officially create that new Class C common stock we just talked about. So this vote is directly linked to making the Cox deal happen by enabling the necessary corporate structure changes. Again, the results were highly favourable. More than 142 million votes supported this change, with a very small number voting against. This reinforces the broad shareholder consensus on the direction Charter is taking. Then came a series of votes labelled from 3A to 3D, concerning specific features of the amended Charter Certificate of Incorporation. These are called governance proposals, and are presented on a non-binding advisory basis, meaning shareholders are giving their opinion rather than a definitive approval. These clauses relate to things like how the board of directors will be composed, the standards for decision-making by the board, and some specific voting restrictions for Cox Enterprises and another major shareholder called Advancing House Partnership, or ANUM. These are all tied to a stockholders agreement that governs how these major players will work together, especially after this Cox deal closes. Looking at the individual results for these governance proposals, each one received overwhelming support. For example, Proposal 3A, which describes how the board's composition will be set up according to the new agreement with Cox and Aon, saw over 142 million votes in favour. Similarly, Proposal 3B, regarding the standards for board decisions, also passed with strong approval with over 142 million for votes. Proposal 3C, concerning those voting restrictions on Cox and Aignan, was also widely supported, clocking in over 14.2 million votes in favour. And finally, Proposal 3D, which clarifies the voting requirements to change the company's authorised shares, also garnered significant approval, with over 142 million votes cast in favour. These advisory votes, while not binding, clearly indicate shareholders are on board with the governance framework being put in place as part of this larger transaction. It shows that the major shareholders are aligned on how the company will be run moving forward. The last proposal shareholders voted on was for adjournment. This is a common provision that basically gives the company the flexibility to postpone the meeting if they need more time to gather votes, especially for those crucial proposals like the share issuance or the certificate amendment. In this case, the adjournment proposal also passed, but with a more noticeable number of against votes compared to the other items. Over 136 million votes were for adjournment, but over 6 million voted against. This might suggest some shareholders felt the meeting should have concluded without the need for potential adjournment, or perhaps they had concerns about what further delays might mean. However, the majority clearly supported having that option available. So, to sum up the voting results, Charter shareholders gave a strong endorsement to the company's plans. They approved the share issuance, the changes to the foundational certificate of incorporation, all the governance proposals, and the ability to adjourn the meeting if needed. It's pretty clear the shareholders are giving the management team the green light to proceed with this significant acquisition of Cox's assets. Following the meeting, Charter put out a press release confirming these approvals. This is standard practice, letting the public know that the key votes went their way. This filing includes that press release as an exhibit, providing external validation of the meeting's outcome. Now let's take a step back and think about what this all means. Charter is making a substantial move to bolster its presence in the business services market. Acquiring these specific Cox units, particularly in commercial fibre and managed IT, signifies a strategic shift. They're aiming to diversify their revenue streams and tap into a growing segment of the market. For businesses, this could mean more competition and potentially better services as Charter expands its capabilities. For investors, it's about believing that this integration will create value, drive growth, and improve profitability in the long run. The strong shareholder vote suggests a level of confidence, at least for now, in management's vision and the strategic soundness of this Cox deal. Acquiring the specific rate and soundness of this Cox deal. From a high-level view, Charter is a company that's been navigating the evolving media and internet landscape for a long time. Expanding into business-focused services is a logical step when the traditional residential cable business faces increasing competition and cord-cutting trends. The success of this integration will hinge on how well Charter can merge and operate these new assets, and importantly, how effectively they can compete against established players in the commercial and enterprise IT space. One key thing to consider is the debt. While this filing doesn't detail the financials of the deal itself, it's almost certain that a transaction of this size will involve significant financing. Managing that debt effectively while integrating new operations will be crucial. We also saw the advisory vote of governance, which shows that while shareholders are approving the deal, they are also watching closely how the company's leadership and structure will adapt to accommodate these new relationships and agreements with Cox and ANAV. The mention of broker non-votes in multiple tables is also noteworthy, indicating a portion of shares that were technically present but didn't have instructions on how to vote for specific proposals, which is common in these large complex votes. So in essence, Charter is pushing forward with a significant expansion into business services, underpinned by strong shareholder approval for the necessary corporate actions. The real test will be in the execution of this deal and how it impacts Charter's financial performance and competitive standing in the years to come. Alright, that's our decoding of Charter's latest shareholder meeting report. What's your take on these numbers and what they signal for the company's future in business services? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.